So how do you know which path is yours? Here's a framework. First, can you afford to pay anything? If yes, and the debt is under $50,000, an installment agreement is usually the cleanest path. If no, you're looking at OIC or CNC. Second, what are your assets? If you have significant equity in a home, a retirement account, or other assets the IRS can reach, an offer in compromise gets harder because your reasonable collection potential goes up. CNC might be the better call while you wait out the collection statute. Third, what's your income trajectory? If you're temporarily broke but expect to earn more in a year or two, CNC buys you time. If you're stable but can't pay the full amount, the offer in compromise might be your best path. And fourth, what's the total debt? If you owe more than you could reasonably pay back in your lifetime, the offer in compromise is worth pursuing. If you owe an amount you could pay off over 6 or 7 years with some discipline, an installment agreement gets the IRS out of your life faster and with less drama. Here's the mistake I see most often. People who should be in an installment agreement file for an offer in compromise because they heard pennies on the dollar. They spend 6 months in paperwork, pay a non-refundable application fee, and get rejected because their reasonable collection potential exceeds their offer. Meanwhile, interest keeps running, and they've lost 6 months they could have spent actually paying down the debt. At Silver Tax Group, we don't guess which path fits you. We run your numbers using the IRS's own formulas: your reasonable collection potential, your allowable expenses, your asset exposure, and your collection statute timeline. We build your compliance strategy, we implement it, and we'll defend it if the IRS pushes back. If you owe back taxes and you're not sure whether an installment agreement, an offer in compromise, or CNC status is your best move, call us at 855-900-1040 or visit silvertaxgroup.com